Thank you very much for finding me out online about the USDA RD, Rural Development Home Purchase Program. This is a no money down payment for the purchase of a property in an approved area. A lot of first-time home buyers I talk to that I need 20% down for the down payment. You don't. You can purchase with as little as zero. That's right, nothing for the down payment on the USDA home loan program. And this program is accessible throughout the United States. So everybody can at least apply for it. Not everybody will qualify for it. Like every program out there, you must qualify for it. The USDA, though, is a no money down for the down payment. It's 100% financing. So if you're buying a $300,000 house, you can finance all that. You can put money down if you like, but it's 100% no money for the down payment. Do speak with your realtor. You need to have some money to open up escrow. It's called an EMD, an earnest money deposit. What that is in good faith, I'm going to purchase this property. I'm going to give you an earnest money deposit to begin the process. That money will be applied for the closing costs, not the down payment. So once you have that money in escrow, let's say it's $2,000, put that money in escrow, talk to your realtor about that on where to send the funds. That money will sit into escrow throughout the whole entire process. We will use that money for the closing costs. We're going to need more than $2,000, but there's ways on financing the closing costs, which is USDA is the only program that does that. And the seller, here I got printed this out. What are some of the primary applicants' qualifications? The seller, not an interested party, but the seller can contribute up to 6% of the sales price, cannot exceed 6%. So $300,000 purchase price, $200,000 purchase price, you got 6%, which is $12,000 or $18,000 for the closing costs. We don't need that much money for closing costs on a USDA. We can, though, use that money to buy the interest rate down. So if you get 6%, great. We don't need it, but if you can get it, perfect. So closing costs can come from a seller, a family member, your own funds for the closing costs. Remember, no money down. This is a program that's available for the no required down payment. The USDA, it's not a widely used program. A lot of people do not know about the program. A lot of realtors do not know about the program. And the reason they don't is they're not in an area that this program is prevalent to them, that they're utilizing it a lot. There's lenders out there that do not lend on the program, so they may not know about it. A loan officer may not know about it. If there's a loan officer in, let's say, Los Angeles market that deals with high-valued clients, jumbo clients, they're not going to know about the USDA because that's not in their market. So I'm glad you found me online when you Googled how to buy a house with no money down in a particular state. But this program is available throughout the United States. So some of the qualification is you do not have to be a first-time home buyer. You could have sold your property yesterday and then qualify for this program. Every program out there, Fannie Mae, Freddie Mac, USDA, VA, and FHA, you must qualify. There are underwriting guidelines. Same thing with the USDA. There are underwriting guidelines. Debt-to-income ratio. You can go as high as 32% on the front end and 44% in the back. And what that is, 32% is whatever the mortgage payment's going to be against what your gross income is going to be. And the back end is 44%. That's your gross income. 44% of that cannot exceed, which is the monthly mortgage payment and all your other debts that you have to pay out every single month. That doesn't include your cell phone bill, your health insurance, your gas bill, your utilities. That doesn't include it. It's what's on the credit report and what's coming out of your pay stubs, such as maybe alimony or child support, or you got sued and it's getting a wage garnishment, something like that. That's why we need to look at your income. So the debt ratio is not as high as something like a conventional VA or an FHA would allow, but still very, very good and very reasonable. So this is a great program for you to apply for if you're looking in the approved areas. And I'm going to have a link below. Click on another video so you can look at what the approved areas are. I got a video on that. If you're looking in a highly dense populated area, that's not going to be an approved area. USDA is more rural, but you'll be surprised in some of the areas. I am too as well when I look at the map, because it gets updated every 10 years. I look at the map and go, oh man, that's now not on the list, or this new area is on the list. So do look at the videos below, but it must be an approved USDA lending area for you to qualify for this program. Okay, so you got an income limit. Right now, I looked at the guidelines on the income limit. I see it as low as $103,500. That's up to 4 people in the household dependents, and that's very high. It's very generous. If 5 or more, it's 136,000 plus. And also I'm looking at the higher ones, 138 start to 182,000 cap. So very healthy income limits depending on how many people in the household. This program is, if you're making 200, 250 a year, this program's not for you. There are income caps. They want you to be able to purchase in a rural development area that is approved. Link below, like I said, but you have income limits. The other programs do not have income limits, FHA, VA, or conventional. There's no income limits on that. But USDA, there is an income limit. There is a lower debt ratio requirement. The other programs do have a debt ratio requirement as well. It's just a little higher than the USDA, but the USDA is no money for the down payment. And the USDA, we can finance your closing costs. This is the only purchase program that will allow you to finance your closing costs. Every other ones, you got to come in with money. We raise the interest rate to help with the closing costs. Same thing with the USDA. We can increase, remember, no money down, but you do still have some closing costs. Let's say on a $300,000 loan, it's about $8,000, $6,000 to $8,000, depending on when we close, because the reserve requirements for the tax and insurance. We can finance the closing costs. If you're buying a house for $300,000 and it appraises for $310,000, we can use that freed up equity to finance your closing costs. That's the only loan program that will allow you to do that on a purchase. Refinance, you can do that all day long, but on a purchase, you can finance your closing costs. Other programs they don't allow you to do that. The seller can pay for your closing costs. So we found some money there, and right now we're starting to turn into a buyer's market that the seller is willing to give up more of their money to sell their home. So that's something you can look at. You can get a gift from a family member. They can gift you the closing costs. You can take out your checking, savings, stocks, bonds, IRAs, mutual funds, money markets, 401k, your Roth. You can take money from there and utilize that for the closing cost. So we can use those funds for the closing costs, finance your closing costs, or you can get it from the seller. Essentially, you can purchase a property in an approved USDA lending area with absolutely no money except an appraisal and a home inspection. Home inspection is not required, but definitely highly recommended. But you're going to have an appraisal cost and a home inspection, which ballparking is going to cost you less than $1,000. If you have $1,000, you have a good credit score, your debt ratios are in line, you don't exceed the max income limit, and it's an approved lending area. I know that's a lot, but it happens all day long. You can qualify. We need to talk to you about it. You can apply and get qualified to purchase on the USDA program if you meet those underwriting guidelines, of course. But a USDA program is a great program for you to look at and qualify. So click on the link below. Look at my video on where these qualified areas are, because you never know. You might go, I'm open to that area. Real estate's all about location. If you're looking in a high populated area like Phoenix, you're going to have to go further out. Wickenburg, Whitman is going to be pretty close. South, going down to Tucson, is going to be close. You got a lot of areas in Utah, in Nevada, that are approved, in California that are approved lending areas, the mountain communities, but you got to be willing to move up there. This is going to be in a more affordable area, good financing, because there's no money out of pocket for the down payment. But if you don't, the stars don't align. Like sellers don't give you any closing cost money, and the appraised value isn't higher than your purchase amount, we cannot finance the closing costs. So be prepared to come in with money. But if the seller is willing to pay for your closing costs, man, this is a great program for you to look at. It's the USDA RD Rural Development Program. Very healthy income limits, a lot of available areas that you can look at. The debt ratio is still very healthy. They just don't want to sit here and have a bunch of foreclosures and short sales on the books. But the USDA program is something to look at. It starts your home ownership journey. You can sell the property. There's no prepay penalty. You can eventually rent this property out, go buy another property. You can, Airbnb it. You have to live in there for the 12 months. That's what the deed of trust says with all the programs, as your owner occupied property for the preceding 12 months after closing escrow. But this is a great program for you to build wealth, build your home ownership for yourself and your family. If you click on the link below, check the available areas first, because some of the areas you may go, nope, not on the list, there's no point on qualifying for the USDA. So click on the video below, check out the approved areas if you're willing to move to these approved areas. And I'm not talking they're rural, like rural, no. But if it's close to where you're looking at, maybe go a few more miles north, south, east, or west to look at property and purchase on the USDA home loan. My name's Nathan Ruffty. Please like, share, comment on this video. But I'd love to hear from you. If you're looking to purchase property, look at the USDA home loan program. I'm licensed in California, Arizona, Utah, and soon to be in Nevada. So if you're looking in Nevada, I'd love to talk to you then as soon as that license comes through. But other than that, you have a great day. Please comment, like, share this video. Give me a thumbs up. Thank you very much. Remember, click on the video below. Let's take the first step on find the areas that you want to purchase in, and then let's get you pre-qualified to purchase in those areas. Have a great day. My name is Nathan Ruffty, 909-503-5600. Call or text me. Looking forward to hearing from you. Bye.